Hello, my name is Gordon De Silva and welcome to Starting in Business Part 1. This is based on some questions and answers we had a session with at a recent conference, and it covers most of the most common questions we got asked from potential startups and new businesses. It's presented by myself, Gordon De Silva. I'm a business and tax expert and a chartered accountant, which ensures that I understand the numbers and I deal with you ethically, I think. So, let's get started. The first things first, figures are for illustration only. Take professional advice from a qualified accountant before you act. That's really important because your personal circumstances will be different from everyone else's, and we want to make sure we give you the right advice for you with all your existing personal circumstances in consideration. Copyright for Gordon's Knight & Co. 2009. So the four main options for trading. The first one is a sole trader. Quite common in the UK, one man working on his own, typically plumbers, electricians, all the trades tend to work as sole traders. Often a lot of the health benefit people like massage therapists, nutritionists, and maybe the whole host of one-man management consultants and stuff may also be using this type of alternative. It has unlimited risk, which is one of the downsides of it, which means that if you get something wrong and somebody sues you, your personal assets are up for grabs. Don't like that very much, and so if you've built up some assets over your lifetime and you probably want to protect them, this is probably not the way you want to go. The benefits are it is a low cost structure. It can be set up free, which is even low cost, and it's easy to start, which means all you do is tell the Inland Revenue within 3 months of starting that you are starting in business, and you won't have the £100 penalty. I am going a little bit quickly because I know that this is a video and you will be able to get to stop it, pause it, replay it as many times as you like, and I want to get in within the 10 minutes of YouTube. Partnerships is the next one I'd like to cover. It has again unlimited risks like sole traders. It is lowish in cost. There may be a few costs to set up. It's very easy to start. Again, tell the revenue within 90 days to avoid the penalty. But it has partnership possible complications, which means that if you and your partners fall out, extracting yourselves from the partnership can cost a little bit of money. And if you haven't got a decent partnership agreement, it can cost a lot of money. A good partnership agreement is essential in partnerships because you know where you stand, you know how to extract yourself, how to set values for the business, what happens if somebody wants to leave. All those sort of things are set up in that, and the best time to set it up is before you start, when there's no money on the table. So, partnerships. Next one is limited liability partnerships. This is quite new and has added a whole layer of tax planning to our arsenal. Limited risk here because it is limited liability, just like a limited company, which is so popular. Lowish in cost. You can set one of these things up for a reasonably modest cost, and it could easily be started within 3 to 5 days or sooner if you're willing to pay a little bit more to Companies House for a same-day formation. Again, the partnership complications need to be considered. Remember, have a partnership agreement, the rules still stand, and the tax saving potential of these in certain circumstances is absolutely wonderful. There are some circumstances, for example, an expanding company or a new company, where we can shelter the taxes for the first 5 years from tax over a period of time. It won't all happen in 1 to 5 years, but it does happen over a period of time. Saves an absolute fortune in tax if you make a reasonable amount of profit. And of course, the old favorite limited companies, great for limiting risk, slightly higher cost of setting up and running, easy to start. We can get these started within 24 hours, typically 48 hours. Very common, lots of people understand this and unfortunately somehow misunderstand it because they believe it's the only way to trade. If you're doing certain things, there are now more than that as an option, for example, limited liability partnerships. And they also miss the tax planning opportunities that we have because there are only about 50 accountants in the UK that have it. That can save huge amounts of tax. However, it is a low tax vehicle, so we mustn't ignore that, and we've got to take that into consideration in our planning. So there we are as a summary: sole traders, partnerships, limited liability partnerships, and limited companies. So, cost versus tax. How do we make a decision on which accountant to choose and which vehicle to choose? I look at two things together. Most people just look at the accountancy fees. They'll say, how much is that accountant, how much is the other one, and they'll make that judgment. Now in this case, you got scenario 1 and scenario 2, accountancy fees 500 and 1,000. If that's all the information you had, and you should have much more than this, you would probably choose 1 because you may believe wrongly that all accountants are the same, right? Well, we like looking at tax as well. So what are the accountancy fees and the tax bill you get from scenario 1 and from scenario 2? So if one accountant charges you £500 but he generates a tax bill of £3,500, and the other one charges you double his fees but he generates a tax bill of only £2,000, which one would be better for you? Now most clients would get the answer 2, but every now and again someone may say 1, and I just want to explain why 2 is the better one, and that is because the total bill of accountancy and tax is £3,000 rather than £4,000, so you're £1,000 a year better off immediately, even without some of the clever planning we do, just by making the right choice on this type of thing. Again, these are just for illustration. So how important is tax to your wealth? For us, it's critical. Take a small business doing around £30,000 of profit per year. That's about a £4,000 tax bill. Over 5 years, that's £20,000 in tax. Would that be nice to save? I think so. Now just look what happens when the average profit goes to £60,000 per annum. Look what happens to 5 years of tax, £70,000. Now, what would it be like if we could take that down to nil? Would that be a worthwhile thing to do? That's one of our strategies that's available to only around 50 accountants in the UK, and certainly worth talking to us about if you think that you'd like to save this amount of tax. £70,000, would that put a little deposit on a buy-to-let for you to improve your pension possibilities on retirement? I think so. So what would you do next? This is again only part 1, so consider the cost benefits of the trading vehicle we talked about. Talk to us if you'd like us to work it out with you. There's no charge for that free consultation. If you're already in business, let us review your accounting situation. Let's look at what you're doing in your accounts, how you're doing your bookkeeping. Maybe we can do some savings for you there. Maybe we can review those for you and find some expenses that you may not be picking up on. About 80% of the clients we see we're able to save tax on. You may be the next one. Maybe you'll allow us to give us a quote for your accounts. You will find that because we systemize so much of what we do, our accountancy fees can be very low. Success tools, we've got a whole host of success tools. Call us for information if you like. There will be other videos like this on those tools. Use the tools. If you want some help using them, give us a call. We'll help you as part of our program to help you use the tools to make more money. When you use some of our tools, we even guarantee a return on investment on our fees because we're so positive that these tools will make you money. And of course we have these tax seminars. These are seminars run over the web, which means that you don't need to leave your office or home. All you do is dial up into an internet connection on the web. You'll see the slides like you are doing right now on screen. You pick up the phone and dial a conference call number. You'll hear us on the other side talking to you, watching the screen. You'll have the chance to interact and ask some questions, get some questions answered. There will be webinars on various subjects from tax reduction right through to choosing the right accountant, to using some of our success tools, and so on and so on. Lots of good information that we have available for you, and as a client, you'd be welcome to all of that information on a regular basis. As a potential client, you also are welcome to it, because our function is to help build businesses in the UK, to make them really fun to run, profitable, and build the wealth of the owners of those businesses. The web site is on the screen there, as is our telephone number and our email address. By all means, use any of those to contact us. We're happy to talk to you in any way, on the phone, on the web, on a conference call. It really makes no difference to us. The key thing to us is that we get a chance to help you make more of every opportunity that's available to you right now and into the future. I really look forward to speaking to you in due course. In the meantime, if there's anything I can help you with, call me or my team. And until we meet, until we speak, all success to you. Cheerio.